Hey guys, what's going on? Welcome back to the channel. My name is Leo, and in this video here, we're going to be doing analysis on Coinbase. Without further ado, let's roll the intro. Okay, jumping in, here we go. Coinbase. Probably heard of this company. It is a cryptocurrency exchange, so for all my crypto fans out there, you probably bought some Bitcoin or Ethereum on this platform. Recently has gone public, I think back in September. I could be wrong. Let's zoom out and see what we got. No, May? Yeah, so May 1st, 2021, it went public. Okay, interesting. So here's my stock research tool here, and we're going to find out a price to pay for Coinbase by going through all this lovely information that we have in front of us. But before we do that, make sure you hit the like button and hit the subscribe button. It helps out the channel a lot with the YouTube algorithm, and it makes me feel warm and fuzzy inside. So without further ado, here is Coinbase. We're going to look at the company metrics first. Looking at the PE, it's 14.69. That's pretty good. We want this number to be under 22.5, and we got it there. And I got to say something first off before we jump, before we go further into this. 195. I think it hit a price point of 353. So it's decreased quite a bit. Anyways, so EPS is 13.70 compared to our 5-year average of 0.8. That's a major jump. ROE trailing 12 months is 93.27%. Amazing number. We want this to be over 15. We don't have a 5-year average because it's a fairly new company. So yeah, these metrics don't really help me too much just because we don't really have 5-year averages. I mean, our free cash flow is at $7.89 billion compared to our 5-year free cash flow average of 1.4. So that's a great thing. That's a good thing to see here. Increase in free cash flow. Return on invested capital, we see that at 25%. That's good. We need this over to be 10% or higher, and we're seeing that here. Amazing. Almond Z and Piotrowski score, we have no information on that, unfortunately, because it is a new company. So, unfortunately, we can't really look at that. All right, so let's go jump into the financial evaluations. We have a score of 4. Let's just jump through these categories here. Now, this section of the app allows me to just kind of get a snapshot of the business that's kind of graded, if I had to, almost like a report card per se. So, unfortunately, we're not going to be able to get a score for a lot of these because the company just has gone public somewhat recent. So, PE ratio, we want the 5-year average to be under 22.5. We don't have that until 5 years have passed. Current ratio gets a point because we want this to be over 1.5, and it's at 1.65. ROE average, we don't have. EPS, we don't have. I mean, I guess we don't have the 5-year average, but there is growth here, as we can see here. So if we just zoom in there, we do have some growth from 0.8 to 13.70. Interesting. Debt to equity, we don't have any information on that, but we would like that to be under 50%. Share dilution, it's at negative 22. Wow, they've reduced shares by 22% over the last 5 years. That's great. That's giving you, the shareholder, more ownership of the business, and we want to see that. That's phenomenal. I hope they can keep doing that. If not, at the very least, keep share dilution or keep the outstanding shares the same. 5-year net income growth is at a 100% increase. Okay. Well, gets a point. We don't have any 5 free cash flow growth. I mean, there is a growth over here of 1.4. I don't know why it's saying maybe an error because maybe it's not. This is not a 5-year. This is probably the average of whatever years are recorded within the last 5 years, but it's not typically a 5-year number. Return on invested capital. We just don't have enough data, so unfortunately we're going to give it a 0 here. And then 5-year revenue growth, it is jumping up with 120% increase over the last 5 years. So this is probably taking, I'm going to say the 5-year cash flow growth. I'll have to do some more due diligence on that and kind of see where the discrepancy is. But from a 5-year revenue growth, we have a 120% increase. Okay. So far, my opinion on Coinbase right now, just based off what we're looking at from the company metrics and financial valuations, I think it's, and what I mean, I personally use Coinbase to purchase my cryptocurrency, and it has been it's pretty decent. It's been a pretty decent experience, at least utilizing the app. But from a financial perspective, and being a public company, I believe early on, like they are making strides in being a profitable business. I'm really a fan of their price to earnings ratio. I'm really a huge fan of that. That's actually quite surprising that it is that low for somewhat of a new company. Usually these companies kind of just blow themselves out of the water and they have a huge price to earnings ratio, but I think with a decrease in price, it brought that number down, because I believe if it was in the 350 range, you'd probably see this at least doubled. We haven't hit a year in this company just yet until we hit May, so it still could be very early and very fresh. But let's try to see what we can predict as a price to pay for this business and see where it might go. So here's the thing with cryptocurrency, or Coinbase, I'm gonna put it at 7 year. Although I am somewhat bullish on crypto, there's always this little thing in the back of my mind that says, this can go away at any second. So I'm gonna just do a 7-year analysis just to be safe, to try to predict where this company might go, because there are other cryptocurrency exchanges out there. I can't say that Coinbase is the best one, but this one I use and I'm the most familiar with, because there's obviously Binance and the like. Anyways, I'll stop rambling. Let's jump into the numbers. We have some numbers to work with here that are quite absurd, to be honest, because we have 139, 119, and 119. 119%. Here's the thing. I highly doubt Coinbase is going to be growing at 100% for the next 7 years. So I have to be conservative and go with a 30% revenue growth. I might even do, to be honest, I might just do 25, 30, and then maybe a wish list of 35%. Even these numbers to me are incredibly high, just because it's possible, but is it plausible? That's what I'm looking for. At $5 billion. Hold on. Wait a second. Question. I just took this in right now. Revenue is at 5.65 billion, but our free cash flow is at 7.89 billion. That's interesting. That is very, very, very interesting. But I'll have to dig deep into the story. But this is just the company snapshot here, folks. So let's we'll go through this and we'll figure that out afterwards. Well, let's work with these numbers here. Profit margin. We only have 25% to work with, so I'm gonna say they'll hover around that mark. Maybe we'll do 22, 23, 24. You know what? Let's just do 23.5. The little percentage. Free cash flow margin 23. So here's the thing. 230%? That is obscure. That is an obscure number. I'm not gonna do that. I'm gonna do like 25, 30, and then maybe on the high side I'll just do 60 for fun. 5.18 and 14.69. Okay, I'm gonna do 4, 5, and 6. This free cash flow margin number is really bothering me. That doesn't make sense because yeah, it is reflecting that the free cash flow is higher than the revenue, but revenue drives free cash flow. Huh, there's a lot of investigation to do. So I'm gonna just put, yeah, I'll keep this as conservative as possible. I'll keep this somewhat hovering in this five range. And PE ratio, I mean, listen, if it can maintain, I'll, how about how about this? How about we do 12, 14, 16. That way we can at least hover around that 14 range. Desired return, we always do 13%. Give us a little bit of margin of safety. Okay. All right. Interesting. I was not expecting this. If we can see right here. I don't know why I dramatically zoomed in like that. Okay. So 79, 146, and 347. And 191 is our average price. We're almost in that range to be, at least to a fair value. This DCF valuation over here on the high side is insane. But then again, that's assuming that these numbers are correct. That's assuming a free cash flow margin of 60%, 16 PE, 35% revenue growth for next 7 years. I mean, look, this very well could happen. This very well could happen. I don't usually. If this one usually lines up green, I'm kind of I look at it saying, wow, that's a really great Christmas list or wish list. I do think it's probably somewhere in. I always think it's going to be somewhere in this category because that's always my conservative estimate needs to be green for me to even try to take action on there. But from what I used here, like 35 compared to 139, 23 compared to 25, 60 compared to 233, and 6. I'm not going to do 6. Change that to 5.5 because we never really hit that number. So let's see if it doesn't change it drastically. And then a higher PE. Yeah, if you believe these estimates here, guys, in the aggressive category, Coinbase is a buy. However, I'm going to be staying away from this one for the time being because I really wanted to get closer to my conservative and moderate numbers, which is around $70, $80 to the 146 range. I mean, we do have it in our moderate category with a 220, but I kind of want to see it somewhere in this range before I look further. Realistically, I want to see this company, or I would rather look at this company when it's been on the market for 3 years, so at least I can get some other comparative metrics to look at, because these are all like one-offs, and you know that, right? Like, I don't have anything to compare it to the 5-year PE or the return on equity, and although as these numbers are impressive, are they just one-offs because cryptocurrency has been all the rage in the last year and a half? I mean, crypto has been around for over 10 years now, but with the amount of booming currencies that have just been coming out of this whole blockchain space, is this just a fad that's kind of got people by storm, and people are just pouring their money into crypto? Personally, I do think there's a lot of great projects out there, but I also think that there's a lot of scams out there that are luring people in, and people are just kind of just pouring their money into this. So that's what's kind of driving these high numbers up. So I'm gonna wait for the smoke to settle and kind of see where it leaves this company. So yeah, that's my take on Coinbase. So I'll wait another couple of years to see where they're at, so I at least do some comparative metrics. And you know what? I could be wrong. I could be entirely wrong, and this evaluation might be the correct number to jump on, and I might be missing the boat on Coinbase. But that's just my opinion. It's important for you guys to do your own due diligence before you jump into any investments like this. This is obviously just for entertainment purposes only, yada yada yada, all that fun stuff. But if you like this video, make sure you hit the like button, hit the subscribe button for more content like this. Drop a comment down below for stock you'd like to see evaluated. I'll run it through my software, as well as if you'd like to get your hands on this software. It is becoming available as an app. I'm working towards that diligently for you guys. Send me a DM, send me a message, and we'll put you on that list, and we'll try to get that to you as soon as it's up and ready. But guys, that's Coinbase. That was my opinions. I'll see you in the next video. Take it easy.